In this video, traders are going to talk a little bit about self-awareness and managing your emotions. Stay tuned. Hey guys, a very warm welcome to you. Right, so thank you for tuning in and appreciate you if you are a long-term subscriber. If you're not, maybe you consider subscribing to the channel. Anyway, talking about the channel briefly, guys, we are going to mix things up a bit, take things up a notch. I'm going to do much more kind of me to you talking about trading. Whiteboard stuff is not going away. You'll still have those whiteboard videos. We're going to kind of be on there and be doing structured stuff. But also I want to spend more time kind of talking to the camera, sharing some trades that I've done, talking a little bit about my thought process, the good things, the bad things, and sharing those will help me as well, because I'm also journaling it, so I may as well do it as a video, but it's going to help you guys as well, because hopefully you're going to see, okay, how am I thinking about things? How am I managing those damaging trades that come along? How am I managing and pressing the profitable ones to maximize the profits? And what I want to talk about specifically today, so by the way, make sure you are subscribed and I've got notifications turned on. Make sure you're sharing, commenting. I appreciate you guys. I know a lot of you guys out there are kind of constantly commenting, constantly liking, sharing the stuff, and it is much appreciated. So thank you for that. So moving forward, yes, lots more kind of this face-to-face stuff. So what I want to talk about today specifically, big topic, but I'm going to nail it down into one small thing now, is discipline, self-awareness, emotional control. Now, one thing about emotional control is I've changed my mind a little bit about that. And it's actually from reading a book, which I'm going to reveal kind of later on, probably a few weeks down the line. I'll maybe do a book review on that and talk about how perhaps that's changed my approach. But that's trading, right, guys? We kind of have a thing that works for us, and then we add more and more on. And whatever level we're at, we're all trying to get to the next level. We're all trying to move on. And so what I want to talk about is specifically being aware, self-aware. Now, discipline is one thing and emotional control is another thing, but being self-aware of how you're feeling and being an observer, I believe, is the one thing that really helps. Example, I was trading a Fed day. I had a great kind of early morning trade on it, or sorry, early after Fed move. I read the price action brilliantly. I'd not got any final targets, interestingly. I'd read the price action, I read that it's changing, I ended up taking some off, and I had like two small trades and one quite decent trade that actually was, beautiful exit, read that turn, beautiful, 6 ticks off the low, and it was nice. So I ended up scaling that, and so it was good. But the next trade that came along was a really good grade A setup to the upside. Possibly B, but almost. It was a very good setup anyway. Had all the box ticked, everything, all the attributes. You can quantify the risk. It was great. And I didn't take it. And I was aware of it at the time, and I kind of, my self-talk was, this is a great trade. You've got a great entry here. Are you going to take it? And at the moment, I'm erring on less is more. Those are guys who know, kind of people on the channel, something that I'm really focusing on myself is less is more, but more size. So less frequency of trades, but more size when you do. Pressing that size. So the risk is ultimately the same, but just being a little bit more focused. And that means that I'm not all the time in front of the screens every single tick. But when there's action, you can press it, make your money, or take your hit if you need to, and then you move on. So this was setting up, but I didn't take it. And what I said to myself was this, like, listen, this is setting up and I don't want to take it. Why don't I want to take it? And I was having this self-internal dialogue, and I thought, okay, well, actually, you know what? The reason you're not taking it is because you're actually very happy with those previous trades. A couple of them weren't quite the final targets. In other words, the price action, you read the price action well, you got into a profit, then the price action changed and you ended up scaling out the position and then perhaps stopping on the final position as it came back to break even. So they were profitable, but they weren't monsters, if you like. It weren't like from from your entry to exit, full size, bang, you read it completely. Very good at reading the change in price action, but ultimately price action changed while you're in the trade. Can't do anything about that. That's fine. And so I was aware of that. And when this setup came, there was a nice long setup, wanted to pull the trigger. I hesitated because I thought, okay, am I misreading this and price action is going to flip on me before I've even got a profit? And so I didn't pull the trigger. I hesitated, and by that time it was quite a fast market. It was off and there was no way I was chasing. And then I had the other internal dialogue of, do not chase this. This is most likely to go to your target, which happened to be the gap fill, VWAP and then gap fill, and it did it. Do not chase this. You have selected it, you've looked at it, you decided, you made a conscious decision not to take it because you felt that you were slightly out of sync despite being up on the day. And so internally I thought, you know what, I will bank today's profits and feel that I've got away with it a little bit because I've been slightly out of sync, and I don't want to undo that by pushing my luck. And I felt that. And that was obviously the wrong decision in hindsight. But at the time, you can't flip-flop around. And this self-awareness of the looking in on yourself and recognizing what you're thinking helps so much. You know, years ago, I'd be so caught up in my thinking, so you missed it. Oh, why don't you get it? And then you feel the FOMO, well, I can just get the last little bit. That'll make up for it. And yeah, in this instance, I would have got away with it. If I chased it, it would have been fine. But you know, guys, if you start chasing stuff, 9 times out of 10, you're going to get hammered on it. It's not the way to do it. So I know that's not in my long-term interest, so I'm not going to chase it. But I sat there and I watched it, and the internal dialogue was so interesting. It was like, okay, that was a great trade, and it would have been a really nice end to the day. It would have really been a real kind of outlier type day if you'd have got on that with your full size, but it didn't. And so you can't beat yourself up about it. You can't be overly critical of it. And when I was writing my journal, I was writing the stuff down, you know, and years ago I would just be writing the most ridiculous things like, you should have taken this, you should have done that. And actually, now I tend to flip things on its head. It's like, listen, you were in tune with the market. You made some great trades in the beginning, didn't quite hit the target, but you were in tune with the market enough to manage the risk and take some off the table and not let them go against you too much and come out, and they're all profitable trades. The final one was a great read. You came out 6 ticks off the low. You know, fantastic read of that. It wasn't what you wanted, yes, but you read the turn. And you didn't decide not to take that final push up, which actually was the better trade of the day, but that's the decision you make. You can't beat yourself up for making that decision. How can I improve on that? Well, I can improve by not allowing previous trades to perhaps influence future trades, but then again, you've got to kind of give your instinct and gut the leeway to be able to say pull back. And I'm of the mind of, hey, I don't mind giving myself leeway to not take a trade. And that might be different for you, because I am more aggressive. I want to take risk. I want to take risk. That's always been my kind of weak spot of really trying to press stuff too hard too soon. And so for me, I'd rather be the other way of don't take it, miss kind of several in a row, and then be there, you know, get 1 out of 3, say that I've called right and I've kind of watched and I've seen done the right thing. I'd rather do that. That might be different for you. If you're shy of pulling the trigger, your internal dialogue and your self-awareness is going to be pull it, take it, manage it. You know, it's going to be different for each person. But the kind of summary of this video, guys, is this key to this, and obviously this is just one example from trading, it's kind of in my mind at the moment, is to step outside yourself and to be looking at what you're thinking. Sounds a bit crazy, but it helps so much, because if I'm recognizing that I'm thinking, hey, this is going without me, I've missed this, I'm getting a little bit annoyed that I've missed this, but then kind of talking to yourself internally, well, don't be annoyed that you've missed this. It's a protection mechanism. You thought that you were quite a little bit out of tune with the market. You didn't want to take this trade. You didn't want to take the risk on it. And so you have this little internal dialogue, and then you settle down a little bit. And then when it's going off without you, you're like, yeah, well, obviously you're going to feel a little bit of FOMO now. That's not a big thing for me normally, because I know chasing is just never ever going to serve me. So I'm not that kind of concerned about that. But you're still there, and you can sit there and let that frustration build. Like, I knew this would be a 150-point move. I knew that I'd be able to get on the end of this. I've missed this. Or you can say, hey, you know what? I didn't pull the trigger this time, but I called it. And in my journal, one of the things I put is the second best outcome. The first best outcome is that you're in the trade, you take it from entry to exit, perfect, big tick in the box. Your second best outcome is that you read the trade, you don't take it, you read the entry correctly, you read the exit correctly. The third worst, then you start getting down the worst outcomes, which is you missed it, you chased it, you got caught out on a little pullback. Fourth one is that you got angry, you tried to fade it. You know, so think of it like that. Put it in the case of you're doing the right thing, Don't beat yourself up about it. Be aware of how you're feeling, be aware of what you're thinking, and then observe that, and then have that dialogue almost separate. I mean, it sounds odd, and I'm kind of thinking, this must sound crazy. But let me know your comments, guys, in the comment section below. You know, if you can step out and think about what you're thinking and be an external observer, almost imagine like you're hiring a guy on a prop desk. You've got a prop desk, you've got 4 or 5 guys there, you're hiring them and speaking to them about how they're feeling, almost like that, but separate, because that allows you to step out of it and be kind of very, very observant about what you're thinking. And the most key thing here, guys, is not letting yourself spiral into the kind of frustration and emotion and let those emotions take control of them. It's like regulating it, spotting it, saying, I know you were a little bit frustrated you didn't take that. Let's just measure that. Let's just put it on, here's the pros, here's the pros, here's the pros, here's the pros. Right, fine, I feel okay about it now. And then you can, it's not even going to have an impact on me. The day's a good day, I'll go into the next day. If there's opportunity, I will just trade that with a fresh, clean head, thinking, yes, you know, you traded well, you were very, very cautious about taking unnecessary trades, etc., etc., etc. Fine. We're thinking about where the account's going to be in the end of the quarter, not where it is at the end of the day. All right, guys. I hope that's helped. If it has, then please leave a comment below and give it a thumbs up if you like this kind of stuff. And if you like this kind of stuff, like I say, let me know. We're going to do more and more kind of face-to-face talking about trades. Whiteboard's going nowhere. We're going back on the whiteboard, doing strategies, charts, analysis, you know, talking about some of the great things, great traders, etc., etc., etc. But maybe some more face-to-face, you and I on the camera. Take care. Bye-bye.